Welcome to Manifested Publishers.
Hello candidates, welcome back to our today's revision session. We are going to answer question number 2 of the May 2019 Fundamentals of Finance. The question is in two parts, A and B. I read question A. It says, firms strive to achieve objectives which at times overlap with each other and in some cases conflict with each other. With reference to the above statement, discuss 4 overlaps that could arise in the course of a firm's effort to achieve its objectives. 8 marks. Candidates, we know firms do business with the main aim of increasing shareholders' wealth or increasing profitability. But this question says that there are times when objectives overlap with each other and in some cases conflict with each other. So you have to identify some of these areas where there are overlaps, 4 areas, and let's do it. This is May 2019 question 2A. Question 2A. 4 overlaps that could arise in the course of a firm's effort to achieve its objectives. Overlaps or conflicts that could arise in the course of a firm's effort to achieve its objectives. The first obvious conflict is that one of conflict between growth and profitability. Growth and profitability. To grow, candidates, to grow or to expand, for a company to grow or to expand in size, a business will need more money, which reduces profit. If you have invested in a company, at the end of the accounting period, the company will pay all the expenses, will pay all the taxes, will pay all the preference shareholders, will pay all the debenture holders, will pay interest. Then whatever remains is expected to be paid to the investors or the shareholders. At times, that money that shareholders expect to be paid in form of dividends, that money may be plowed back. So that is a conflict. Shareholders may need that money, but the company may also need the money for expansion because profit or retained profit is a source of income. So that is a conflict. As much as a firm would want to expand, then that firm will require more money, and one of the cheapest sources of raising capital is internal source, and that is a conflict. Then number two, we can say shareholders wealth maximization shareholders wealth maximization objective and managers interests. The objective of maximizing wealth is key to the shareholders. At the same time, the managers, who are the custodians of the resources of the company, could may want to increase their salaries, may want to increase their perks, and that is a conflict, because in case the management pays more in terms of the director's remuneration, then that will reduce the amount of wealth that should be allocated to the shareholders in form of dividends. So there is that conflict between shareholders' wealth maximization and the manager's interests. And the manager's interest could be the director's remuneration, manager's compensation, the allowances that the managers pay themselves, and so on. So there is that objective of maximizing the wealth of shareholders vis-a-vis the welfare of managers. This is a conflict, and sometimes we refer to it as the agency problem. There is always an agency problem between shareholders, who are the principal, and the managers, who are the agents. Then number 3, the third point is the corporate social responsibility towards the surrounding community, towards the surrounding community at the expense of the company's objective of wealth maximization. Sometimes there arises conflict as to whether the company should invest in corporate social responsibilities or to just focus on the key objective of maximizing shareholders' wealth or taking into account the interests of the other stakeholders. So that is an overlap, because remember, the resources are not unlimited. The company has limited resources. So choosing between investing in corporate social responsibilities and sticking to the key objectives of the company, that is an area where conflicts can arise. Number 4 is a cost-cutting measures such as job cuts, cost-cutting measures such as job cuts may be beneficial to the company, but detrimental or harmful to the employees. Whereas a company may choose to reduce the operational costs by firing or laying off employees, that may be beneficial to the company. The company may save on costs, but on the other hand, that will be harmful to the employee. So the objective of reducing the costs and the objective of satisfying employees who are key stakeholders. Employees are key stakeholders in a company. So there has to be a balance. As much as the company may want to lay off the workers, the company may be in a very difficult situation because of the harmful effects occasioned to the employees occasioned by such measures. So these are overlaps that could arise in cause of company's effort to achieve its objectives.